Hello everyone, it's Professor Reiko here. So this is our last video in the Stockholders Equity section. And so this one is on the Statement of Stockholders Equity. So the Statement of Stockholders Equity is actually one of the four financial statements and basically what it does, we can say four financial statements. If you count comprehensive income as a separate one, I guess it'd be five. But it's the one that gets probably overlooked the most in a lot of your classes. You know, I just kind of gloss over it and kind of show an illustration, but typically don't have the students write one out. What it does, though, it presents the changes in every equity account, all right, starting with the beginning. So it's like a reconciliation. I mean, if you think about a reconciliation is how did I get from point A to point B? All right, well, in the case of the Statement of Stockholders Equity, it's how did I get from the beginning balance of all my equity accounts to the ending balance of my equity accounts. All right, so if you think about, comments, the way it typically sets up is across the top here, you're going to have like your common stock, additional paid in capital, common stock. Then you'll probably have like retained earnings. You probably have like accumulated other comprehensive income. Might have treasury stock if you have that. And then what it does is it takes your beginning balance, all right, and then it has all the transactions. Or I shouldn't say transactions, but the additions and the deductions to get to your ending balance. Okay, so this ending balance will match up with the numbers on the balance sheet. Okay, so if you go to the equity section of your balance sheet, all the numbers that you get here for the ending balance coming across the way are going to match up with those numbers on the balance sheet. Okay, so all this is a reconciliation of how we got to the beginning to the end. So let's just take retained earnings. All right, so retained earnings, I've written, this formula we've talked about in prior videos, but retained earnings is your beginning retained earnings, so your beginning balance, plus your net income minus dividends. Now, you might have a couple other adjustments like changes in the accounting principle that might affect retained earnings that we'll talk about in future chapters. So you might have something else in here. But for the most part, that is our basic formula, and that gets us down here to our ending retained earnings that goes to the balance sheet. So that's all the Statement of Stockholders Equity is. All right, it's just a reconciliation from the beginning balance. Now, look, the beginning balance here will be last year's ending balance on your balance sheet. So a lot of times, if you're looking at a company's financial statements, they're showing 3 years. What they'll do is instead of putting ending balance here, they'll call this 2017, ending balance 2018. Then they'll do it again 2019 and so forth, and they'll show all keep going to where they show all 3 years of the reconciliation of those accounts that all match up with the years presented on the balance sheet. All right, so I know this is a little bit shorter video, but I just want to touch base on it. If your teacher makes you write one of these out, make sure you can handle it. A lot of times they're not going to. You might see one in your homework, but you could also have questions on multiple choice about that. So, the way I always tell students, I was like, just take each column individually. Let's take treasury stock since we did that in this example. All right, so treasury stock, what increases treasury stock? Well, we purchase some treasury stock back. We sell some back into the open market. All right, so things like that are what are going to affect your treasury stock. So take each one individually and then kind of in your mind think about the journal entries that affect those. All right, so that's the Statement of Stockholders Equity. So this concludes our Stockholders Equity section of the balance sheet. So that'll be the end of the videos for this chapter. Next chapter, I believe, will be earnings per share, which is a fairly tough one. I consider this chapter fairly easy. So we'll move into that one on our next round of videos. So make sure you tune in next time. Hopefully you've enjoyed this series of videos on equity, and hopefully it helps you prepare come test time. Please subscribe to my channel if you're enjoying it, and be sure to share it with your friends and your classmates. Thanks. I'll see you next time.